1 year ago, Xpeng stock price was sitting in the doldrums. It had basically shrunk enormously. About that time, I had to sell my stock, and I did. I mentioned why, but part of the reason was actually because I needed the money to buy a house. And I didn't have a whole lot of choice. But I've got to say, at the time, I was surprised that my stock hadn't gone up and that it had gone down. And I couldn't understand what was going on. I couldn't understand why consumers had stopped buying Xpeng cars. That all of a sudden changed drastically. In fact, this year, Xpeng sales have grown more than any other car company in the world. I don't think any of us could have predicted that, but considering how good their cars are for the money, we should have known that would happen, I guess you could say. Hindsight can be a cruel mistress. This year, Xpeng stock price has doubled, and its market share as a result has climbed above for the first time its rivals Li Auto and Neo. Hello, my friends. Welcome to the channel. I'm Sam Evans. You're watching the Electric Viking. Looking at Xpeng, exactly 1 year ago, on the 1st of January, Xpeng stock price was sitting at $11.50. It's now sitting at around $23. So it's almost exactly doubled in price in the space of 1 year. YouTube's new algorithm means that you're often not getting all of our videos in your feed. There's 7,500. I'm pretty sure you're probably not seeing a lot of them. In the description, there is a link to our newsletter. Click on that and you can get an update every day of all the latest news in the electric car industry. Its market cap is now sitting at 20.4 billion, which means it's now worth significantly more than Neo. Neo's market cap is 17.4 billion. Now, even Neo's stock price has also increased, just not by as much as Xpeng's. Neo's stock price was sitting around $4.50, and on the 1st of January, it's now sitting at $7 and it has a market cap of 17.4 billion. However, there's an interesting parallel that you can see here, and an interesting kind of comparison from CNET Post showing how Xpeng, or Xpeng as they're known in China, how their monthly deliveries have continued to grow, whilst one of their biggest rivals in China, Li Auto, their sales have actually declined very quickly. Xpeng has surpassed Li Auto in market capitalization for the first time, as the two companies have demonstrated starkly different growth trajectories this year, says CNET Post. At press time, Xpeng stock rose 3.1% and Li Auto's fell by 2%. This means now that for the first time, I believe ever, Xpeng's market cap is higher than Li Auto's. However, of those three, Neo is now in third place when they used to be in first. For most of the past 2 years, though, Li Auto held the highest market cap of the three big EV brands in China, which they've been known for the last few years. And these three companies, their performance has often been compared to each other. It's just, for some reason, been the thing to do. This year, though, has seen big changes with the emergence of companies like Xiaomi, Leap Motor, and of course, Xpeng sales numbers skyrocketing. Unfortunately for Li Auto, their deliveries have continued to show weakness, with their main L series extended range electric vehicle models experiencing sharp declines in sales. Meanwhile, Li Auto's new Li i8 and their Li i6 models are still in the production ramp-up phase. The company delivered 34,000 vehicles in September, a 37% decline year-on-year, marking the fourth consecutive month of year-on-year contraction, similar to BYD actually. Xpeng has maintained robust growth this year, delivering 41,600 vehicles in September, its third consecutive record high monthly figure. From January to September, Li Auto delivered 297,000 vehicles, down 13% year-on-year, while Xpeng delivered 313,200 during the same period, surging 218.8% year-on-year. Neo's performance in the first half of the year wasn't so good, but recently their sales have increased pretty significantly. They delivered 34,750 vehicles in September, marking their second consecutive record month, with a 64% year-on-year increase and an 11% rise from August. However, from January to September, NIO delivered 201,000 vehicles, an increase of only 34.8% year over year. Also, my solar and batteries. I've got a 50 kilowatt hour battery here, and I've got a big solar array. So I pay $0 for electricity. That's including charging my electric car. Resync Solar is the company that I used. I'll put a link to them in the description below. So you can see how from these big three companies, really one of them is succeeding enormously this year, and the other two are kind of struggling with the competition, struggling with, to be honest, the other 91 car manufacturers, and also some of the kind of more exciting launches from other brands. I personally think the launch of the new P7, which I'm about to review in China next week, is, well, it's played a big part in the brand recognition of the company on a global scale. And it's vehicles like this that kind of get people excited. Guys, what are your thoughts on this? What are your thoughts on the stock price of these EV companies in China? Do you think they're a good buy right now? I think this is a really challenging thing to predict, because the global automotive industry is going to contract over the next 10 years. I mean, even Xpeng's CEO, He Xiaopeng, has predicted that there's only going to be 7 real car makers left in China within the next 5 to 10 years, and everyone else is going to go bankrupt. 7, he says. So he says they have to make sure that Xiaopeng or Xpeng is going to be one of those 7. Now, if that is true, that means that of the 92 electric vehicle manufacturers, 85 of them have to either, I don't know, be absorbed by other companies or just go bankrupt. So it's going to be a pretty wild ride over the next 10 years. But the ride is going to be equally wild for every automaker competing with these Chinese car companies who are innovating at the fastest pace we've ever seen in history. Thanks for watching.